Well, welcome back. It's been a bit of a while, but I've been switching up, doing my things and that. Moving house, soon to be moved into. But we're going to get straight into it today because what I'm going to be doing is I've switched up a bit from crypto. I'll still be doing crypto, but I started looking into gold. Mainly just using ICT because I use ICT a bit in crypto, but it's not it's not ideal if I'm going to be honest. It's better to use volume along with maybe a bit of ICT, but gold I've been just using ICT by itself, and I found a bit of a hack towards the market that I've been doing this last week. Done a bit of back testing the last few months as well. I would do some bar replay today, but for some reason my payment's not going through on TradingView. I've done 3 payments, put all with support, but it's just there for them to sort out. So you might see a few ads today, but it should be sorted fairly soon. Jumping straight into it, so I'll give you the rules for this strategy I'm going to be using for gold. So between, obviously I'm on, as you see down here, UTC -4, between 0, so midnight, to 05, so between these two times here, let me put that in black, we're looking for the highs and the lows, so BSL and SSL, and once we've got the buy side and sell side liquidity, let me just make these a bit bigger. That'll do. 22, that's 22. So once we find the buy side and liquidity, sell side liquidity, we're going to mark that out and we're going to grade it. So grade the 5-hour period. Now, so this is to be used, I'd prefer to use it with a bias, but it can be used without a bias, and today I'll be testing it without the bias just to save switching up all through the time frames and trying to scroll back and stuff. But basically you grade the 5-hour period and you're just looking for a liquidity reversal using the unicorn model. Now if you're not sure what the unicorn model is, I'll show you that quickly on BTC because I did patch up a trade earlier. It worked quite well if I'm going to be honest. Didn't take the trade, but I was just sort of testing it out because I don't really use, as I said, ICT within crypto. So that's all it takes really. And then you're targeting the target 50% and target the what's premium discount, so P/D liquidity. So it's basically on the other side of 50%. So that's literally all it is. So what I'm going to do is I'm going to snip that and just use that to mark that down. I'm just going to make sure that I didn't cancel the recording because I can see the thing at the bottom, but yeah, we're all good. So once you've done that, well, that's literally going to be my strategy for trading gold if time repeats itself, which so far it has done. So I'm going to go back to the start of this week now, so to Monday. Here's Monday. These bloody ads. So there's a bit more to that than I explained. So if the 50% has been touched first, you can trade towards the liquidity. So Monday is a perfect example of this. If I draw out between midnight, let me get a vertical ray actually. What's a vertical ray? Alt V. So if I go to midnight, just there, Alt V, put a vertical line up to 5 o'clock. There. So now we're marking out buy side and sell side liquidity between these areas. So we've got this high and we've got this low here. So we'll mark it down to where we took it. So now we're going to grade this area with the DRT. Just down to here. So in this scenario here, opened up at 5 AM, 10 AM UK time, but 5 AM New York time, and in this scenario here we touched the 50% first. So we've got to the 50% mark, so we'll be trading towards liquidity. Obviously if you had a higher time frame bias you could confirm if you had a short bias and it would work, but so just using that we're looking for the unicorn model. So before I jump into this exact trade, I'll show you the unicorn model on BTC. So coming into BTC, obviously it's Saturday today, so I don't trade weekends anyway, but here we've got all the stuff I've marked out, but the unicorn model is essentially So what the unicorn model essentially is you're looking for the breaker block, which in this case here is this red candle here. So it's the last bearish candle before the high was made. So that's this candle here, and you're looking for the fair value gap within that area, which is here. Take a trade from the fair value gap or the breaker, depends on price action, and SL just above, and aiming down to the 50% of the range between midnight and 5. So in this case here, that allowed us to take a 1 to 7 risk to reward trade. You could start aiming towards these liquidities in premium discounts. In this case, it's the liquidity in the discounted range. So you could have aimed for here, or even buy side liquidity there. So in this case, I just aimed for this one. I sent this to my mate as well, I was talking about it at the time. But heading back to gold now, going back to that Monday range we were talking about, we're looking for exactly the same thing. So see if we can pitch one up on the Monday. Let's have a quick go. So we're looking for breaker block, which in this case is this bearish candle here. We've got the fair value gap inside the breaker block. So you're looking for the fair value gap inside the breaker block, which is just there. And take a short just directly from that fair value gap. SL above the breaker, and in this case we're aiming towards this liquidity, which is a 3 risk to reward. So that's a 3 risk to reward trade right there on a Monday. Now let me get rid of these boxes just so they don't confuse us in the future. I'll keep the rest of the stuff there. Heading over to Tuesday, so let's go over to Tuesday. Boom 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 boom. Where's Tuesday? Midnight. There's Tuesday midnight and Tuesday 5 AM, which is here. And I'm going to mark out again the highs and the lows, look, the buy side and sell side. So we've got that for buy side, for sell side, and for buy side, just as it closed, we left liquidity there, so instantly broke it. You can see there we instantly broke that liquidity. So if we were going to frame a reversal around this time here, market opens, well, the market doesn't open, but for the time we're looking for, the time opens, price comes down, makes a new low, and because we're looking for a bullish breaker, it's the up goes candle, which for me, the green candles are the light ones and the red candles are the dark ones. So we mark out this breaker here. Now let me just quickly delete that line so I can see where the top and the bottom of the candle is. Here, so there's the breaker block, and I'll put that back. Alt V. Oh, just not Control V, Alt V. There. And as soon as that forms, we've broke through the breaker, and we're looking to retest the fair value gap inside the breaker. So in this case, just there. Take the long position. SL below the breaker, and targeting the 50%. So in this case here, we'd be targeting there, or as mentioned as well, we could look for the liquidity and premium discounts. In this case it's the premium, so we can target that liquidity, or again then buy side, but just heading for the 50% again, just to the minimum you get out of this trade is a 6.6 risk to reward. So again, nice and easy. And heading on to Wednesday. Let's go to Wednesday again, get rid of these boxes so they don't confuse us. So Wednesday midnight, so this is the 3-minute time frame, by the way. Wednesday, start a midnight open, which is just here, Alt V, and going to 5 AM, Alt V, and again marking out the same, sell side, buy side, and grading that area, so from that high down to that low. So in this scenario here, we hadn't touched 50% first, and we took sell side first, buy side first, so we looked to frame reverse around buy side. So as we came down to make this low just here, we've got the low, the breaker block for that low that took out liquidity is this green candle here. Is there any fair value gaps inside this area? Yep, we've got a fair value gap here. Have to do it from there because it's an imbalance, and as price breaks through it, you look to take a long trade as price comes back down to this area. So you'd be taking it on this entry here, and take an entry and TP up to the 50%. So in this scenario here, you see we just got wicked out. Fair enough, not every strategy is going to work, but so far out of the 2 days we're up about 8 risk to reward. 3 days up 8 risk to reward, so it's not too bad, and that's just a wick out in that scenario. So we're just going to move straight on to the next day now. So we're on Wednesday right now, so we're going into Thursday. And Thursday is where I actually started taking these trades, because I tested it live for the first 3 days. I'd done the back testing for a few months as well, and so I started taking it on the Thursday. So let me leave all the drawings in there. As you can see, I came down to take it again. You could have pitched the same trade, but I only take the 1 trade per day. But yeah, going into Thursday now. Let's have a look. Thursday, open midnight, which is there to 5 AM. There, marking out again the highs and lows, so you can see even without a strategy, see how the liquidity from these areas acts quite well, no matter what you're trading. So even in the scenario where we lost here, that liquidity still acted as a reversal to take us towards the 50%. We just got stopped out. There's no problem within that. We came directly up to the premium liquidity, reversed. Yeah, it's exactly what we'd expect from this sort of profile. So far on all the days, you can see the liquidity. Even on here, we've caught this trade for a long, but you could have took the short as well afterwards. Obviously I'm not going to take 2 trades in a day. Even on here, that's just an example of liquidity being taken, but it was a bearish day anyway. So the fact we respected that 50% is an indication towards that bearish day. Going forward to here again, we're just going to mark out buy side, sell side, grade the area, and see what trades give us. So let's mark it out. So there. So as soon as we take out that buy side just here, we can see that before we made the highest up close candle, or down close candle, sorry, because we're looking for bearish, is this one. So there's our breaker, and there's our fair value gap. As price broke through the breaker, we had the fair value gap during. We take a short at the bearish fair value gap. SL up top of the breaker, target down to the 50%. Can I get that on there? I'll do. Now if we pitch that trade out, so what's that, 4 risk to reward, we can see it got filled there, but even if it didn't, you've got all of this range until it does fill. Again, you could target down to these sell sides as well, or even the premium discount liquidity, which is going to be here for a 7.18, or again buy side, which is all the way down to there. Now the likelihood is you probably would have hit SL at entry. SL would have been an entry after you'd have took some partials at this liquidity at 50% at least. But yeah, we're going to keep that marked in for the original trade, just the very conservative, where we'd actually aim for a quick fast trade. So we'll get rid of these, get rid of that, and moving on to Friday. So this is another trade I took Friday. As Friday opened, there's the open here. Alt V, 5 AM, which is here, Alt V, and marking out buy side and sell side. So again, what I'm going to quickly show you as well. So yeah, I'm marking out the sell side there. I'm going to mark out the buy side. So marking out the buy side there, marking out the sell side, and just quickly I'm going to show you again, just on the previous day, how well this liquidity acted. Reversed directly at the high, and even if it came down to the low and you decided to take a trade, like you could have maybe caught something there, but again, that's not what I'm going to be doing. I'm going to grade this area. Just to there. So yeah, again, when we've opened, we've not touched the 50%. Came up to take sell side liquidity, and we'll frame a unicorn from this. So in this scenario here, we've got the bearish candle before the high was made here, the fair value gap inside of this, which is just here, and you take a trade. Well, in this case here, when you come up, you can obviously see there's a inverted fair value gap there, so you would have done Just north fair value there, so just done that. So it's above the breaker, and you can see we almost got wicked out, but price respected it pretty much to the tick, which was pretty spot on, if I'm going to be honest. And took a trade all the way down to the 50% here. You could leave it running down to these liquidities again, but again, just being conservative, this is the minimal you got out of the trade. So yeah, it works pretty well for this whole weeks of trading. So if we go and tally that up quickly and actually have a look at the entries we got on that. Out of the 5 days, we got one win of, what was that, 3.1, another win of 6.6, so what's that, 9.7. Minus the bond risk reward here, so it's 8.7 plus we'll call that 4, so 12 point, what did I say, 7? Yeah, 12.7 and 17.4ish. We've got about 17.4 risk to reward just in 1 week of trading. That's being conservative in all of these scenarios. So let's call it here. We can't really do much more on that trade, but on this trade here, for the maximum, I mean, you could have just got that on that one trade. Here, you wouldn't have hit it. It was a loss anyway. Here, you'd have hit it. That's another 8. You can see also price action here. Here, you wouldn't have got to the here, but you would have had your SL entry anyway. So you can see there, the strategy itself is quite a successful one, if I'm going to be honest, and it works quite well. I've backtested this quite a while, so I've been using this strategy within gold to just trade, and obviously this is without bias. Bear in mind, if you had a bearish buy for the whole week and didn't take any longs, you take this short, you wouldn't take that, you wouldn't take that, you take this and you take this, because the week did go down, but it just depends on your bias ahead of a week. But I think I'll be looking to, depending on my bias, risk less against the bias and risk normal with the bias. But you can see this worked quite well, and even just testing it on BTC today, it worked amazing. Again, showing that just there. Breaker, fair value gap there. There's the opens between 0 and 5, liquidity being taken. Got the break in the fair value gap. It's worked beautifully. So yeah, I'll be using this to trade within gold. Hopefully it goes well. If you want to keep track of what I'm actually doing, let me load up Discord. You go check out this Discord. I'll put the link in the description. I'll wait for this to update. So yeah, you go and check out the Discord in the description. I do have my own Discord, but I'm not really going to be plugging that much, to be honest. It's a pretty dead server. Only I talk there, whereas here you've got support from other traders in the trading chat, and obviously I've got my channel here, and this is me taking long yesterday on gold, using the same theory, but I sort of, you see I took the short and took the long here, just down at the bottom, but which is quite good because I had the buy stuff long anyway, which is the reason I took it. But yeah, go check that out, and I'll catch you soon. I'll probably do a trade recap each day, possibly maybe at the end of the week, just to see how trading gold's gone, but I think it should go alright, and we'll see what happens.